We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. Today we're going to talk about a new quick draw pattern find tool called the Wyckoff Trade Range Quick Find Tool. Wyckoff accumulation distribution patterns are the father of all major patterns. Elliott wave and all these other classical patterns are children to the major pattern of supply and demand. Wyckoff friendly charts have many sequences of recognizable Wyckoff accumulation distributions. This means the composite man is busy in the security. This means it's highly tradable. The main pattern of any price and volume chart is of supply and demand. Every other pattern is subordinate to that pattern of supply and demand. Elliott wave, harmonic patterns, classic patterns, head and shoulders, cup and handles, they're all subordinates to the Wyckoff accumulation and distribution because they are the true analysis of supply and demand. Okay, let's have a look. Now it's a simple tool. It looks a bit like a retracement tool, but it requires you holding down the L key and selecting 3 points. Point 1 to 2 is a move. Point 2 to 3 is the reaction to the move. Now point 2 and 3 has to coincide with the Wyckoff thinking and the application of a buying climax to the automatic reaction or a selling climax to the automatic reaction. Now B and C can be like an ABC, or it can be a straight drop like an A move I suppose. But the idea is a Wyckoff trading range starts with a recognition of the selling climax or the buying climax and the automatic reaction or the automatic move. Okay, because that's where the trading range is set upon, is when the initial climactic action is triggered and you get an automatic reaction. This means the impulse of the up move or the down move has ended as supply overcomes demand in an up move, of course, and it's obviously the other way around in a down move. But we're just going to talk about a distribution pattern here. We've got a big move up and it got to this level here where supply overcame demand and it forced a correction. So this sets the parameters for the trading range as you watch in real time as the price pattern builds. So you end up drawing a support line down here and a resistance line, and we've got a 50% line in the middle, which basically means we want to find out whether the consolidation is above the 50% line, below it, or in between. This gives us an idea of the demand and supply battle going on. So the most important point is that you have an up markup. A markup means all the accounts are most likely profitable. That means they've got green on the screen, and when you have green on the screen there's going to be a reaction to take profits or profit taking. And obviously a markup means shorts are build up and they're going to be ready to profit. Okay, so that basically means the positions are lopsided in all the trading accounts and all the major players. So that means we're going to get a reaction. And when you've got a major build up of one side of the accounts, that means you're going to get an interesting pattern as it requires distribution or more further accumulation. So it requires a big phase B. Okay, so you've got to have a tail. If you don't have a tail, you have no build up of pressure. You have a reaction, which is just normal profit taking or shorts coming down, and then we allow the phase B, which is a supply and demand battle. So there's two major keys here. I've drawn the grey dotted line. This is the end of the move of the up move or the move into the pattern. And here we get another dotted line which shows that either demand or supply has taken over, and here we've got supply taking over. Because phase B is pretty much a neutral stage of the battle of demand and supply. But whereas phase A, or building into phase A, it's clearly demand, and after phase C it's clearly supply or demand. In this case it'll be supply. So in between it's a neutral playground. And then we watch for signs of demand and supply in the Wyckoff phases and what have you. Here we have a bull trap or up thrust after distribution, and it collapsed back down, sign of weakness, last points of support, and obviously it collapsed after that and went down to about 45 if I remember correctly. So this quick draw tool is a 3 clicks with the L key, and it allows you to highlight Wyckoff patterns so you can study now or in the future. It also helps you recognise that the chart is Wyckoff friendly, and if it's Wyckoff friendly that means the composite man's in play, and that means you can apply your Wyckoff education to profit from. Let's have a look at that. So here I've drawn the tool many times. You can just click on that. As you can see, there's many Wyckoff friendly patterns. I didn't draw in here because it just got too messy. You can draw another one down here. But it just goes to show you that accumulation, markup, reaccumulation, massive markup. Everyone was thinking might be a reaccumulation, but it failed. It ended up being a distribution, and obviously we had an accumulation down here. So yeah, obviously this is the Apple chart has been very Wyckoff friendly. So keep an eye on that. But this little tool just adds a visualization as to the Wyckoff patterns, and you can measure them in real time. So now that you've applied the tool and you want to do a further study, you can use the Wyckoff object tool, which actually is locked onto the chart, and you can analyze it when you're obviously want to study something closer. So this tool is a quick apply tool where you can apply the chart with 3 clicks in the L key. It's not saved, but it's just quickly applied to do a quick study of the chart, and then you can graduate onto the object tool to apply it. Now let's have a quick showing of how you use it. For example, here's the same Apple chart. I've got the finger on the L key. I just go bang, oops, there, boom, boom. Or I can go boom. Now obviously it's very critical as we select your climax and your automatic reaction. It's not always the extreme. If you're going to do this like that, that is not correct, because the climax happened here as the pattern built up there. So you've got to apply your Wyckoff knowledge as where the biome climax and the automatic reaction is, and it's not always the end point. Okay, it's normally when the trend slows down. So in this case, it might have been here. As you can see here, we had a secondary test down here and a spring here that carried on up here with a test of support there. So you've got to understand your Wyckoff logic. You just don't go straight to the end point. You've got to see where the trend slows down, where the automatic reaction is, and the volume pattern. Okay, that's how you apply it. It's a good little quick find tool when you're studying a chart and you want to see whether the chart is Wyckoff friendly or continues to be Wyckoff friendly. And once you are familiar with that, you can start applying the hard drawn Wyckoff object tool that we have in our site. This is done on the analysis chart. It's just a very quick and easy tool to use. Once again, it's 3 points. Hold down the L key. 1, 2, 3. Thank you very much for watching.